In this section, we're going to look at the ideal or perfect type of gap setup, or what I would call the money gap, which has the highest odds of moving in the direction suggested by the gap. So the ideal bullish 7-point gap setup will be consolidating. It'll be in an uptrend. It'll have a void above. The last day will be a bearish wide range bar or a topping tail. In other words, we have a stock that has been moving up. Over the short term, it's had a small correction. There's a void. And the prior day was a negative day, ideally a bearish wide range bar or a topping tail. And on the gap, it clears the high, of course, of the bearish bar and the high of that base or some type of consolidation that was going on there. It has shown relative strength, and the end of the prior day will have been a base as well. For these ideal gaps, using the 1 or 2 minute time frame can be used for entry. That might be considered somewhat aggressive for some, but in this type of situation, the odds are overwhelmingly in your favor. Go for it. Now, a 5-point setup to use the 1 or 2 minute, there better be a significant shock there. A gap above resistance within a downtrend. Right? This may not be an end of day base and it may not have relative strength. The 5-minute time frame can always be used. It may be a little late for the ideal point plays, but waiting 10 minutes, 15 minutes, sometimes it'll be 20 minutes for things to set up properly. On any given day, things can be different, of course. By putting together the criteria we've been talking about, you'll know whether it's ideal, perfect 7-point play, go for it, within a minute or two, or whether to wait. Now, there's no perfect time frame. I've worked with traders that, for whatever reason, they like the 3-minute chart instead of the 2-minute chart. It's fine. Whatever you're going to use, you just want to stay consistent in what it is and not be switching from different time frames all the time, because you're just going to get confused. There's no perfect time frame. So let's look at a few examples. Here you see our 7 criteria that we are looking for. Now let's go through them. Gapping above or below recent support or resistance. Gapping above recent resistance. Above or below a wide range bar. Oh, we wouldn't call this a wide range bar. However, 3 days down is similar and very much almost the same. So we look at this in a way, as I explained to you, about putting bars together. In other words, 3 days down is the same as looking at one bar. It's not a wide range bar on this time frame, agreed, but some common sense here, some flexibility, as I've already talked about, and recognizing that this 3 days down under this base is very similar to being a wide range bar to the downside. So we're going to give it a point. Above or below a base or continuation, absolutely. Has a void above? It does. There's a little resistance here, but you do have a void, and as I explained, we'll be looking at the bigger picture. All of this suggests the ability to get through it. In addition, we are looking at this from a day trader's point of view, gap trading in the morning. An ability to go from this area here, let's just call it $37 to $39. And I mean, it did get up to 40, but let's say we use 39 as a target. A $2 trade with minimal risk, we'll take that every day. Relative strength or weakness, we're going to give it a point. I don't have what the market's done here, but we're going to assume that we're showing strength. Is the gap size ideal, okay, or too much? I'm going to call that ideal, because it's just clearing the top of the base and an end-of-day base. Here I'm going to use the 15-minute chart on these examples just to get a longer-term view intraday of what's happening here. And yes, it is a base, so the entry could have been taken from the 1-minute time frame. Let's look at another example. Gapping above or below recent support or resistance. Yes, it is. Gapping just below this base here. And it's ideal. It's just clearing the bottom of the base. Wide range bar, close enough to it. And that is a wider range bar than in the most recent days. It isn't compared to this gap down day, but overall, it's a wider day. And as I said, we're going to be flexible with this, and we're going to go with it. It closed up near the high. It's a larger green bar. I like it. Above or below consolidation or continuation? Absolutely. There was a consolidation there. Gets a point. Has a void. Big void. In this example that we have here, we looked at one or two examples that had the potential to be swing type gap setups. And this meets that type of criteria. Because of the overall large pattern here, topping pattern. Look at the big wide range bar here. It's going to be a big momentum move intraday. There's a big void. Move higher over time. There's a big void here. This has the potential to have a sizable move to the downside. So while we look at things from a gap trading point of view first thing in the morning, we can also put these type of gaps on our interest list looking for swing setups. What we'd be looking for here in that type of situation, ideally, would be some type of a consolidation for a couple of days and then a continuation pattern to the downside. That could set up in many ways, of course, but you've got the big picture bias here and then wait for it to set up in alignment with that, looking for prices to go lower. I'm going to give it a point for the relative strength of weakness here, just to go through the examples. Is it ideal? Okay. Is it too much? I'm going to say this is ideal. I'm going to move here. And an end of day base. We have a base here. And it's got the void as explained. It's got lots of room. Bottoming tail bar here on the 15-minute. Not a concern. And think about why wouldn't the bottoming tail bar be a concern? As we've talked about previously. That being the big picture. So the big picture gets the respect, and I like to say, over a bottoming tail bar or a small piece of information suggesting stabilization. We're always going to wait for a confirming price pattern, and if we were looking at this on a 2-minute or maybe even the 5-minute, we're going to see some type of a reversal pattern up here. And you can see on the 15 after the topping tail, which tells us that sellers came in and took control. Prices then fell. And as this fell here, the wide range bar, and while in this section we're not covering candlestick patterns and the interpretation of those, I want to point out that this bottoming tail bar is a range expansion bottoming tail bar. We covered that in the candlestick section, that this was a powerful bottoming tail bar, more so than a smaller range bottoming tail bar that would signal the end of this move on a short-term basis. Now here we have a 6-point money type of gap. Oh, why didn't it get a 7? Well, no wide range bar. And this was moving up over several days. So as it moved up into this area of minor resistance, the momentum stalled. It moved down below this small area of support and down to the next area. And I was going to say it could have stabilized there. We really can't see here on the 15-minute what happened. It looks like it just dropped right at the open and then consolidating. Did it move down under the base? There was a continuation. There was a void here down below. I gave it a point for relative strength or weakness. Is it ideal? Is it okay? I'm going to say it's not ideal, but it's definitely okay over here, and came from an end of day base. So we give it 6 points. Now, 2-point gap. We'll pass on this one. Gap above or below support or resistance. A gap below the wide range bar, so that's a point right there. But there is a little bit of support, and there's a little bit of support over here. So overall, this really is not anywhere close to the ideal type of situation. It did not clear the base. Moving down below here, that would have been of interest to us. Even though there's some support here, if it had gapped down below this $35 area, then it would have gained our interest. I'm not giving it a point for relative strength or weakness. Again, I'm not looking at the market, but I didn't give it a point. Is it ideal, or is it okay or too much? It's okay, but it's not ideal. It didn't clear here. And there was an end of day rally. It didn't come from a base, so no point there. As I said, bear call spread trade. Definitely a candidate for that, for checking out options here, because as it moved up into and retesting this prior high, and then the gap down near the low of the wide range bar, we look at this as saying, what's the probability of getting back above this area? And based on this pattern, I'm saying it's relatively low. Is there a spread within a time period that we're comfortable with, where we would say that prices can't get back up above here? And that's what we look for with those spread option strategies. 3-point play, maybe. Gap above or below recent support or resistance. Well, it gapped above, but the next area of resistance is right here. So while we give it a point for getting above this area, gapping above it, right into the next area, so it's not getting a point for clearing this whole situation here. It did gap above a bearish wide range bar. Relative strength to weakness, I didn't give it a point. Is it ideal? Well, it is by getting above here, but the next area of resistance is just too close for comfort. And an end of day base actually was falling into the end of the day and then gapped up above this intraday resistance. If it had gapped above everything here, it would have been a 5-point play. So here's a play that we would have passed on, say a weak 2-point play. Above or below recent support or resistance. Well, it did clear this support here, but it happened after a wide range bar down. There's no shock to it. Moved from this area of resistance all the way down past this support. This is not what we're looking for. Below a base or continuation. It got below this pivot, but as already mentioned, it's already fallen from up here all the way down here. Relative strength to weakness, I didn't give it a point. Is it ideal, okay, or too much? It's not bad, but again, coming back to the fact that the day before was a wide range bar to the downside, and it was actually an end of day decline. So this has poor odds of continuing in this direction, and it doesn't have good odds of retracing back up into this area either. So it's definitely something that we would pass on. So part of what we're covering in these examples is what not to trade. All right, a 1-point play. We're definitely passing on this. It was a breakout failure. There's some shock here, but it didn't gap under the wide range bullish bar. It didn't clear the bottom of the base here. It didn't get below support or a continuation pattern. It doesn't have a void. It didn't have the relative strength to weakness. It isn't ideal. It did come from an end of day base. We did look at one example like this in a prior section where I talked about an intraday type of a setup that could have potential intraday even though the daily wasn't in alignment with that. And because of this uptrend and this consolidation and the gap under it, there could be something that could have set up. That isn't the focus of what we're looking for. We're looking for those ideal situations in the morning on those gaps to trade those. This could be something because of the shock that occurred. That could happen later in the morning, or it's just going to be a pass